Business versus personal credit. That's the episode for today. And without further ado, let's dive in. Okay guys, so I've been getting a lot of questions about credit lines and which are actually the best ones that you can use for real estate investing. So there's no really right or wrong answer into which one you want to choose to use, whether personal or business. But what I'm going to do today is actually explain what the major differences are, what you need, and how is it going to benefit you if you prefer to choose one over the other. All right, guys. So for the most part, a lot of you have probably heard about personal credit and how that actually impacts your FICO credit score, right? So we're going to list the items that you're going to need for each and one of them. And starting on the personal side, you're going to need a social security number or a tax identification number called a TIN. And what are the major differences between these two? Some people don't have a social security number, but you still want to pay taxes at the end of the year. You want to declare taxes. So for those who don't qualify to have a social security number, you can actually choose to apply for a TIN number. And I'm going to provide you the link down below in the box. You also need a good FICO score or a decent FICO score. And by that, I mean at least a 650-ish and above, right? And then you also need to understand how your personal credit is going to impact your debt and how that debt is going to affect either in a positive or a negative way. Now, on the business side, you're going to need something that's very similar to the Social Security number, but this one, it's a number that's assigned to a business. So it's called the EIN number. And typically, in order to get an EIN, you need to have a legal business entity. So it could be a corporation, an LLC, or a limited partnership, etc., etc. There's a bunch of them, but I typically work with these two. So each of my rentals are actually placed inside an LLC, and there's a corporation which I use to conduct business, and that's the one that you actually see in the link. That's novariseinvest.com. You also need to have a good FICO score. It's a little bit different from what you would normally see on the personal side. So when to use which? That depends on what you're looking for, right? So typically you get higher business credit lines on the business side versus on the personal side, but you have to establish a pattern for it. So for example, if you have a personal credit, you have, let's say, I'm thinking a 700 score, right? You want to go out and you want to apply for a credit card. You're going to get, let's say, depending on your spending habit and how long you have your credit history for, somewhat between 10, 15, 20, maybe if you're lucky, 50,000, but you're going to have like a long credit history and a very large spend on a monthly basis and show the ability that you have been able to pay it down. On your personal side. And then every time you actually spend money, what's going to happen is that your credit score is going to drop. So there's more intricacies that goes into it, like the details about your FICO score. So every time you apply for a personal credit card, your FICO score is going to go down a few points. But then once you get your personal credit cards approved, then the credit lines get kicked in, and then your score actually goes back up again. So if you have no clue what I'm talking about, feel free to just take a look at this video. It's going to make it much more clearer for you. Now, on the business side, you will still need your FICO score. And the reason why is because credit card companies, they need to know that there's that person behind the business, someone who's actually backing up the business. So if you can prove that you own this business or you represent the business, every time there's a debt in that business credit card. So credit card companies are want to know that there's actually a person behind that business entity, someone who's going to be responsible for paying down the expenses on the credit card, someone who's going to be responsible for signing it. They just need to see that there's an individual. So that's why you were going to need your FICO score when you apply for business credit. But once that's established, then everything is going to go into your EIN number. So that credit history is going to follow, it's going to be recorded actually under your EIN credit, and every debt, everything that you spend on that and on that business credit is not going to go onto your personal credit anymore. So having a business credit is considered good credit, and then your personal can, depending on how you use it, can be either good or bad. So it is good if you keep it under the 20% utilization, but anytime you go back up or you go past that 20%, then it becomes bad credit because lenders or the banks are actually seeing that you don't have the ability to manage that money in a very efficient way. Credit cards are meant to be used for an emergency or for you to help it spend or resolve something, but you have to repay it back because you need to show that you know how to manage your money. So it's the same thing with business credit, only this is going to get recorded into your EIN as opposed to your social security number. And then over time, you're going to build a history that you actually have the ability to manage that money effectively and in large sums. So the understanding is, well, if you have a business, chances are you spend a lot more money, unless you have like a family of like 20, under one roof, then that's a different story. But chances are you have a higher tendency to spend, let's say, $20,000 on a monthly basis and put it in your credit card because you're trying to expand your business versus when you put that in your personal credit card. Like, I mean, how many of you actually spend $10,000 a month on just like random stuff? Like you go to do groceries, you pay your bills. I see it very high unless you have like, I don't know, a very lavish lifestyle that's going to require you to spend that amount of money. And if you do, that's completely fine. That's great. But you still have to show the ability that you can pay that down. So ideally, you will spend the money and pay it down completely. So the more you do that, the more the credit cards is going to automatically increase your credit lines without you even having to ask for it. But you can, if you don't, but you show that you can pay enough to keep your business, your credit card debt under the 20% utilization, that's completely fine. You can still request a credit line increase. Just don't do it right away. Do it, let's say, I don't know, every 6 months or so. Don't do it every month because that's going to impact your credit as well. And it's going to look like a roller coaster. And then everything that you spend on the business side is not going to show on your personal profile. It's going to show in your business profile. And chances are you're going to get a lot higher limits every time you pay down that debt. So if in January you spent $50,000 because you needed to buy construction materials or you need to renovate one of the kitchens in one of your rentals, try to have the ability to just completely pay it down or at least pay a big sum of it. So that way you also want to keep it under 20%. So that's actually the major differences. Whether you should use one or the other, I will leave that completely up to you. If I have to choose, I'll normally go onto the business credit because I wouldn't want it to show on my personal credit. I want to keep my credit score as high as possible. So if there's an ability for me to keep it off that personal record and then just maintain it elsewhere, I will typically choose to do that. Oh, and one more thing before I end this video. So for those who are trying to establish business credit, right, as soon as you open your LLC, you can try and apply for a business credit card, but chances are you're going to get denied. And the reason why is because you don't really have a credit. Like the lenders are probably going into the system and trying to pull up your company information, and chances are there's nothing to say about you, right? So normally they recommend keeping your company for at least 1 year before you even pursue a credit card application, a business credit card application. But in my case, I actually decided to, just test that out to see whether that was true or if it was just more of a myth. And so it turns out that in fact it was true for the most part, with the exception of charge cards. So what exactly is a charge card? A charge card is a card that quote unquote doesn't have any credit limit. And that's not entirely accurate. They don't say, well, you have $5,000 or you have $10,000. Basically, it will say there's no spending limit, but they're going to determine your spending limit based on your spending habits. So you can get a charge card either on your personal credit or on the business credit. And the way they determine, let's say, for example, in your personal credit, is that they look at your spend history. So if you have a credit history of about, I don't know, let's say 5 years, they're going to go back and they see, okay, how much does this person spend on a regular basis? So if it's an average of, let's say, $500 every month, chances are you're going to get approved for something no more than $5,000 because that's basically how much you typically spend on a regular basis. So the higher your spend is and the faster your ability to pay down that debt, that will determine a higher possibility of getting a large credit line. So the issue with the charge cards is that you don't have that flexibility to pay down the debt like you will do with a normal credit card. So they typically, like a regular credit card will say, well, if you owe $5,000, your minimum payment is 125, let's say, every month. And then okay, I have to at least pay 125. You can choose to pay more if you have the money. But if you don't, you know that you have to pay at least 125. With a charge card, you have to pay everything. So if you spend $5,000, you have to go in and pay all $5,000. There's no flexibility. It's not like you can divide and conquer and say, I'm going to pay $2,500 this month and then $25 the next. If you do that, your credit is going to get screwed, and you're going to get a bunch of calls from the collecting agencies or from the bank themselves trying to get their money back. And it's the same thing with business. So if you apply for a charge card, you have to pay down. The good thing about applying for a charge card on this business side is that in my case, I did the experiment and I got denied for all business credit cards except for a charge card. So what I did is, after 6 months of opening my LLC, I went ahead and I started applying for a bunch of business credit, and I got denied for all of them except for a charge card. And I'm guessing the rationale, for the banks to approve that charge card is, well, if she spent $5,000, she's gonna have to pay us $5,000. So this is gonna be her chance to prove us that she can actually manage her money effectively for her business. So for those who are interested about that business charge card, the link is down below. So just feel free to take a look at it. It's an American Express card, and I think that's basically for everything for today. So I hope you guys found this content valuable. There was nothing fancy about it. It was more like for informational purposes. So if you liked the video, please subscribe or give me a like. And if you know of someone who's actually going to find this information valuable, feel free to forward it to them. I would love to hear or actually help them decipher this whole credit business versus personal credit misunderstanding. And without further ado, I'll see you guys next time. Take care. Bye-bye.